Hello, everyone. This is Adam Meister, the Bitcoin Meister, the Disrupt Meister. Welcome to this week in Bitcoin. Oh, we got a special one. Today is September the 14th, 2018. Strong hand, long-term thinking, unconfiscatable. And for this show, we got to remember, control your private key, people. That is very important. But we're going to be talking about big organizations that might be controlling your private key one of these days, because we're going to talk about financializations. We're going to talk about ETF. We're going to talk about Africa. We're going to talk about so much, because we've got an international crew coming to you today. Farzam Isani is coming from Johannesburg. Caitlin Long is coming from the East Coast, just like I am. And Andy Hoffman is in the Mountain Time Zone in Denver, kind of near where Caitlin's from originally. So welcome to the show, everyone. I am so pumped to have this all-star international crew here today to talk about Bitcoin and everything you love, crypto. Caitlin, we're going to start with you. You've never been on the show before. These other two guys have been on the show in the past. Welcome. And let's just jump right into something that is part of your expertise. It is financialization, Bitcoin, Wall Street background you've got. Talk a little bit about that, but talk about good financialization versus bad financialization. This is something you talked about actually on the Trace Mayer show, which, I mean, it was a must listen to. Everyone's got to check out that. By the way, everyone's links are linked to below. You can check out all of these guests below. Caitlin, take it away. Welcome.
Sure. Thank you. It's great to be on your show. Financialization is a word that to me brings negative connotations. I realize that's Trace's sixth network effect. And he and I were talking about that before the Bakkt announcement came out, which is the first real move to using physical Bitcoins. Again, I know physical kind of, you've got to put in quotation marks. That's a financial market term to distinguish between synthetic, which is all cash based, and physical, which is actually settling in the underlying. But financialization, a lot of financialization is bad. So you really do have to be very careful to distinguish between the good and the bad type. Financialization is basically what Wall Street does for a living. And Wall Street regularly creates, as standard operating procedure, more claims to an asset than there are real assets. That's financialization. And of course, the Austrian School of Economics folks among us would recognize that as what Mises would have called circulation credit. And I need to distinguish here. Good financialization includes the regular one-for-one backed debt. There is absolutely nothing wrong with debt. There's absolutely nothing wrong with coin lending, as long as it's 100% backed by the real on-chain coins. When you start to actually have off-chain claims to Bitcoin that are sold as if they're Bitcoin, and they're no longer linked to the actual blockchain itself, that's when you start to get that circulation credit creeping in. That's the bad type of financialization. I've called it leverage-based financialization. Another way to call it is uncovered claims to Bitcoin that are not 100% backed by real Bitcoin. There are lots of ways that Wall Street does this. It's very insidious, and because of the way the accounting works, auditors don't even catch this either. It's something that builds slowly over time, and unfortunately, I think it's probably coming to Bitcoin.
All right. Now, that just scares everyone right there. That last line, unfortunately, it's coming to Bitcoin.
Yeah.
But how about you can keep track of it on the blockchain? You can require these companies give out a public address. You're saying they're going to be able to get away with this somehow.
Nobody's doing that, right? Look at the products that are already out there involving physical Bitcoin. Look at GBTC, look at LedgerX. Are they disclosing public keys? Nobody's doing that. I think that Nick Bhatia wrote a Medium post, and I give my hats off to him, saying if we really want to do this right, and you are going to be commingling Bitcoin in what's called an omnibus account instead of holding it for individual customers on Wall Street, you really need to be disclosing those public keys. And I've been saying that to the regulators too. Use the blockchain to your advantage. You can track this stuff and verify that there are no shenanigans happening behind the scenes, because GAAP accounting is not going to pick this up, which means the auditors are not going to pick it up either.
All right. Now, okay, so bad financialization, it's coming. But good financialization is also coming,
Yeah.
correct?
Yeah, sure. It's already here.
It's already here. So we got to look at both sides. Now, again, people are going to say, oh, it wasn't meant for the banks. Bitcoin wasn't meant for the banks. We can't stop it. It's a done deal. They are coming. They're not the Messiah. They're not the devil either, because in the end of the day, if there is a big custodial hack one day, if there is this bad financialization, I think people will demand that, the public keys are revealed or are given out. Right. I mean, Caitlin, from what you've seen here, I mean, you're involved on a lot of levels on Wall Street here. Do people even understand what a public key and what a private key is? Or are they just getting into this for greed?
Well, you mean the people on Wall Street or Bitcoin users?
Well, and then regular users too. There's a big learning curve here. There's just a big learning curve.
Look, I think the early adopters of Bitcoin clearly understand what the difference between a public key and private key is. Hats off to Andreas Antonopoulos and others who have been saying until they're blue in the face, you don't own your Bitcoin if you don't control your private keys. But Wall Street isn't built for that. Wall Street is not built to handle bearer instruments. They haven't handled bearer instruments since, stock certificates went immobilized and dematerialized. Those are the words that the lawyers would have used in the 1970s, right? So now you've got not just bearer instruments, but digital bearer instruments that Wall Street's going to have to start managing when it's dealing with physical Bitcoins. Big distinction, by the way, the cash settled contracts, I don't care about those because the Fed can always bail out an institution if it gets in trouble with cash settled futures contracts and the like. But the physical settled Bitcoin futures, that's different because Wall Street has to touch these physical Bitcoins. And we all know what's happened, how many hacks there have been in the custodial exchanges. There is not 100% security in those custodial exchanges. For the most part, even when there was a big run on Coinbase a couple summers ago, everybody survived it, right? And that tells you they're not really playing three-card Monte behind the scenes, we hope. But we have no way, even with those custodial exchanges, to know whether they're playing three-card Monte. They don't tell us what their public key addresses are.
All right, we're talking about billion-dollar tremendous companies that are going to end up with these custodial accounts because so many people out there only are going to feel comfortable to own Bitcoin through these traditional financial mechanisms, which is, again, you just said Andreas gets blue in the face screaming, control your private key.
Right.
That's the only way you own it. People don't get that, though. They don't get it. And that was so anyway, these big corporations are going to become Bitcoin banks. Okay.
Yeah.
And even though they are the richest corporations on the planet, are they going to be able to have an unhackable account, unhackable custodial organization? Or is one of them eventually going to get? It's a honeypot.
Absolutely.
You can tell where I'm going with this. I think one day Bitcoin is going to be worth $80,000, and one of these things is going to get hacked, and it's going to be something like we've never seen.
Ugly, absolutely. And the size. I just was having this conversation yesterday with some important people in the industry. The size of the Wall Street firms compared to the size of the crypto exchanges, we're talking about very different zip codes here. Because Wall Street is mass market and, the crypto exchanges, it's the early adopters, maybe some of the early majority that are, have been involved. I think in the big bubble that happened at the end of last year, Coinbase was opening something like 1 million new accounts a day, right? A lot of those folks probably don't understand. They don't really own Bitcoin. They own an IOU from Coinbase. Right. But the magnitude of the Wall Street money that's going to be coming in here is a different zip code because it's institutional money. And that's why it's so important to get this right. And to your point, I am reasonably certain that one of these guys is going to get hacked. Virtually every custodial exchange has already been hacked. And I will also say the engineers who are in charge of those custodial exchanges, they've been tried by fire. The engineers of the big Wall Street firms, I worked there for 22 years and very familiar with how they work and how their tech platforms work. They have not been tried by fire, and this is not a skill set that Wall Street technology platforms have, which is managing digital bearer instruments. So if I were forced to keep my Bitcoins at a Wall Street firm versus a custodial exchange like Gemini or Kraken or Bittrex, I'd rather choose one of the latter because they've been tried by fire for years. And the Wall Street firms have not, and they're going to be doing this in very large size. And the thing that really bugs me, I'll be very, very clear about this, taxpayer-backed Wall Street firms should not be leveraging Bitcoin. And it's going to happen. And that's what, and it's going to burn them.
Wow. Pound that like button, everyone. We're getting some real honest talk here. And again, I want to point out, you made a very interesting point there. You're comparing two different types of custodial accounts, the ones that have been tried by fire, the Coinbases of the world, and then the future ones that are going to be controlled by these tremendous organizations. And it all sounds scary, but remember, people, you can avoid all that simply by getting your Trezor, your Ledger Nano, and controlling your own private key. I mean, this all sounds scary, what she's saying, but the simple answer is control your private key, and then you don't have to worry about these shenanigans. Sure, there's going to be a huge hack one day that is going to hurt the fiat price of Bitcoin. You all have to be comfortable with that fact. That one day there is going to be a tremendous hack like you've never seen before that's going to freak out the mainstream world, but you will still have the same amount of Bitcoin. All right, Andy Hoffman, you got a lot to say about this. You have been in a world with fake gold paper before. What do you have to say?
Wow. Okay, a lot of things here. Well, first of all, yes, I spent 15 years being one of the most well-known people in the world discussing the hypothecation of paper gold, silver, not to mention the manipulation of all the financial markets. So I watch this carefully, and this question as to what will happen with Bitcoin, with all the financialization, is certainly something of interest to me, starting with when the CME futures and CBOE futures started in December, and now talk of ETF, et cetera. And by the way, I have never heard the term in all my years of watching all the paper gold. I never heard the term circulation credit. So I got to add that to my repertoire. So as far as, well, we're not talking about institutional ownership now. Now we're talking about custody in general and the dangers of it. And the funny thing is, as much of a naysayer as I've been in general, because I've seen the destruction that Wall Street has wrought, I just don't see that kind of damage being done in Bitcoin. I think there's a lot of fear out there because we've seen Wall Street do so much damage, but they are not, but Wall Street didn't create Bitcoin. It didn't make Bitcoin go to $20,000, and it's not going to make it get widespread adoption. It's certainly, especially during these bear market periods, although I would argue that Bitcoin bear market bottomed in February, and we've just been consolidating. Altcoins, another story. During this period, everyone's looking for, hot news topics that'll get the price up. Oh, if an ETF is approved. And yes, if the SolidX ETF is approved on September 30th, the price will go to all-time highs relatively quickly. But I don't think that's going to happen. We'll see what happens. But as far as custodian in general, I agree with Caitlin completely. Wall Street has no idea how this works. I would bet most of Wall Street has not a clue what a public key versus a private key is until they do a little bit of research. And even then they go, well, we can't manage other people's money with Trezors. So yes, there'll have to be solutions. And yes, it'll have to come from mainstream players like Goldman Sachs and all these guys and Bakkt and IC, and they will all do it in time. Now, GBTC is an interesting case study because people forget that it's been around for a long time. It's not a closed-end fund, but it's pretty close. It's a closed-end fund that can't be increased in size. And when we learned at the time that they did the Bcash dividend a few months ago, we learned that GBTC is one of the largest Bitcoin holders in the whole world. I forgot the number. I was just trying to look it up. It's a big, big amount. So they've been custodially holding Bitcoin for institutional investors for a long time now without any hacks. And believe me, when Goldman Sachs and all these guys get in, and they're all every day a new Wall Street bank comes in, and the higher the price goes, the more that will come in. When they do it, they will do it right. I mean, yes, you could say it's a honeypot, but so is every Wall Street account now. I mean, hackers are more sophisticated. They can hack in and steal your capital, your cash account as easily as they could steal Bitcoin, is my guess. Maybe less so. I don't know. I mean, yes, you can have an inside job, but you can also have an inside job with cash accounts, with electronic holdings of bonds or stocks, and probably an EMP will endanger. An EMP will endanger a cash account just as much as a Bitcoin that's being held by a third party. So I'm not so worried about it. I do think that the custodian services are needed to get Wall Street in a big way. I do believe that they're going to be there probably next year. And I'm not so worried, but particularly because, like you say, we, the small investors, we hold it on Trezors. That's what we do. So this is all, we'll all be immune to this in time. We'll get to the question later on if you want about whether I think Wall Street can manipulate. We've talked about this before, but that's another topic.
Okay. Farzam, we're talking about first world problems here. Do you have, I'm sure you've got some thoughts on it, but you see this from a different perspective. South Africa is a first world country, but at the same time, it is a developing country also. What is your take on everything that we've been saying here?
So yeah, I think it's a very exciting time. I think it's important to put things into context, which is, we talk about cryptocurrencies and how it's exploding, etc., and it has obviously. But if we add up stocks, bonds, cash, gold, you look at the value of all of that, which is about $200 trillion US. We're talking about a market that's less than 0.2% of those financial assets. Forget about real estate, etc. So we've got a long way to go for this to become a really systemic issue for the world. And you talked about first world versus third world, etc. The thing I love about cryptocurrencies is that these assets don't care who you are, where you're from, etc. It's beautiful. It totally brings to zero a lot of these man-made assumptions we've made about ourselves and identity, etc. So I think we've got a long way to go. I do think that there are going to be dangers that come about soon, but I think that's endemic in our financial system at the moment. I think there are huge challenges right now just with straight out debt without any type of cryptocurrency coming along. And I think we're going to see some huge ramifications of that over the next decade. So that's the one thing I'll say. The other thing I'll say is that, in the crypto circles, we love to talk about decentralization and how the world is going to be decentralized, etc. I have a pretty different perspective, which is we came as humanity from a decentralized world. We had bearer instruments. People had their own gold coins, silver coins, etc. And we realized that there are risks with having your own bearer assets. And there are security risks with that. And so, a couple of guys got together, formed a little goldsmith, etc., and said, listen, we'll take your gold from you. We'll become a centralized institution, and we'll give you an IOU. And people said, hey, there's some risks over here, but that sounds pretty good. And so we moved from a decentralization to a centralized system. And now, because of all the lack of trust that many people have in these institutions, people are trying to find a way to get more decentralized again. Now, we couldn't do that with digital instruments, obviously, because there was no way to prevent double spending in the past. But now this whole idea of the prevention of double spending using this technology has brought about a whole new world that actually opens up possibilities that are glorious. So, last time we chatted, Adam, I was the blockchain lead at the largest bank in Africa. I've since left to start Valor.com, VALR.com. And the premise of that is that we're moving towards a decentralized world, but where there will be central intermediaries that people do trust. I think it's inconceivable that everybody will be holding their private keys in the future. Some people want to be able to reset their password. They do not want to have the responsibility of safeguarding their own private keys. So I think we're for anybody that kind of says it's going to be this way or that way, I think we need to have a little bit of humility to say we're at the beginning of this huge Cambrian explosion of assets and business models, etc. Where we end up, we don't know, but it's a very exciting journey ahead.
Well, I've got to agree with you. Where we end up, who knows? That is a great question. At this point in time, I'm going to agree with you. I think most people, they want to have a Bitcoin bank. They do not want to control their own private key. They would love there to be on the corner a Bitcoin bank, and then they would get into Bitcoin. Let someone else hold my Bitcoin. I think those people right now far outnumber the people who are willing to take personal responsibility over their own Bitcoin. And I don't know how it will change or if it will change. I mean, there's a lot of opportunity for the, people say the banks are going to go out of business because of Bitcoin. No, if it comes to a point where Bitcoin is huge, they'll just all become Bitcoin banks, I think. and people will gladly just let someone else hold their Bitcoin. Something that I want to quickly get to, because again, you're in Africa and we're talking about these, I guess, big picture type of issues, financialization. Are people talking about this in South Africa, the financialization aspect of Bitcoin? Or is it more a down to earth thing? Like, how are we going to help the people? Or how are we going to avoid the unconfiscatable aspects of Bitcoin? You know, because in some of these countries, we've had governments take away assets from people. Bitcoin is something that, cannot be taken away. What is is there a different perspective there in South Africa and in Africa beyond? You've got a unique, we want to hear.
Yeah, I think there's a little bit of a difference in level of conversation. Obviously, with the CBOE and the CME and the futures trading in the US, and also, platforms in the East with that have quite sophisticated platforms for trading of derivatives of different crypto type of assets. We in South Africa aren't talking too much about that. I think the discussion is mostly on, is the retail market going to get access to buying crypto through the endorsement of institutional or institutions? We talk a lot about institutional money, but there's a huge thing about institutional endorsement. Now, it started slowly with the likes of Goldman, etc. And having been in a bank over here, there is a lot of skepticism and there's a lot of concern for reputational damage to get into this area and to so-called endorse it. Now, I think we're getting to a point relatively soon that reputational risk is going to shift. Right now, it may have been a reputational risk not to touch this stuff, but soon it will be a reputational risk not to be involved with it. Because as soon as you're a financial institution, and financial institutions, we've had them for ages, they're not dollar-based or fiat-based institutions, right? These institutions deal with what humanity perceives to have monetary value. So as the monetary instrument changes, to your point earlier, there will be certain institutions that are too addicted to their current cash flows, they cannot pivot and they will go out of business. But there's no reason that the current incumbents cannot change their business models and take advantage of this new world. So that's one of the biggest things for me, is this dichotomy between us and them. I don't think it's that cut and clear. I think there's a kind of a morphing in between these worlds, and I think the winners are still to be determined. So in South Africa, we are expecting towards the end of this year a regulatory or some regulatory guidelines as to how cryptocurrencies will be regulated. Right now, for instance, they're not part of what's called the Financial Markets Act here. They're not deemed as securities. They're not deemed as currencies either. The central bank has come out and said that. So we're still waiting for that. But I think there's a lot of progress with the regulators. Over the past 6 months, the central bank has held 2 big conferences with probably about 400 and 700 people respectively, to bring the community together to seek their guidance and their input as to what the regulatory framework should be. So I think it's really encouraging in South Africa. And I think something to note is that the central bank, the SARB, the South African Reserve Bank, recently won the Central Banking Award for the best distributed ledger initiative around the world. And they actually put together an Ethereum-based platform where they were investigating the ability to settle rands on a blockchain using Quorum and Ethereum. And so it's a whole separate discussion as to fiat currency on a blockchain. But I think it goes to say that even though we're here in the south of Africa, we still like to think we have a right to be seen on the map.
All right, and any country, any state can step up. There's no gatekeepers here in the land of Bitcoin. If you want to be the Bitcoin capital of the world, you could be Wyoming if you want, and we'll get to that in a second. And you could be the Bitcoin capital of the world. Nothing could hold you back. First of all, we have put a lot on the table here in terms of topics. Do any of you have questions for? I know so much has been said. I didn't want to cut anyone off. Do any of you have questions for the other one?
No questions. I just think I'll note that tomorrow marks the 10th anniversary of the Lehman bankruptcy. So this is a well-timed, financially themed show.
Absolutely.
Absolutely, indeed. Caitlin, I have a question for you. What Farzan just kind of implied is that eventually, the institutions, maybe right now they're putting on the face that they're it's something they don't want to be involved in, but eventually it's something they will want to be involved in. In the scene, on the Wall Street scene right now, there's still a lot of talk that's coming from there. That it seems like this is something they're not too comfortable with. But behind the scenes, are they 100% comfortable with Bitcoin? And are they making plans to totally, rehypothecate and all of that stuff, totally financialize it?
Well, they're never going to be 100% comfortable with it. I don't think anybody who uses it is 100% comfortable with it, right? It's to be honest, because it is scary. It's a digital bearer instrument, and you're always worried that something's going to go wrong or that you're going to get hacked or kidnapped or something, right? It's digital bearer instruments that inherently have higher risks that you have to take responsibility for. But yeah, Wall Street is going to rehypothecate. The perfect example of this is Citigroup announced this week that it's going to be creating depository receipts for Bitcoin. Okay, a depository receipt is just basically like a little trust account that's going to hold Bitcoin, and it's going to clear and settle through the depository trust company. We haven't mentioned them yet, but basically that's where a lot of the sloppy accounting takes place in Wall Street that allows a lot of the accounting systems to get out of sync with one another. And the big example of that is the Dole Food case, right? Where 1/3 more shares were created in Wall Street's accounting system. These were valid legal claims to Dole Food shares that didn't exist. And that happens through the DTC. And so when I saw that Citigroup is doing this depository receipt with the DTC, I just laughed because we're trying to fit the square peg into the round hole. And there are going to be accidents here. The DTC is not set up to handle clearing and settlement for a digital bearer instrument. And, if anybody wants to set up one-for-one non-leveraged based financialization Bitcoin, Godspeed, right? That's what all the cryptocurrency exchanges have done. And, it does appear that they've survived the run on the bank. The big exception, of course, to date, well, a couple of them, Mt. Gox, of course, but OKEX most recently did a bail-in that, that if you're playing around with leverage with cryptocurrencies, there is no lender of last resort. And so you really do need to be careful who you're doing business with, because there isn't anybody to bail out those crypto entities. What's different about Wall Street firms is that the clearing and settlement infrastructure is fundamentally designed to lose track of who really owns what, and that there's fault tolerance. Patrick Byrne refers to a John Kenneth Galbraith phrase, the bezel in Wall Street, and it's there, and it's not necessarily purposeful. It's not necessarily nefarious. It's just inherent in the clearing and settlement infrastructure. So now Wall Street's coming and saying, well, we want to put Bitcoin into our clearing and settlement infrastructure. To use Jameson Lopp's phrase, Wall Street needs Bitcoin more than Bitcoin needs Wall Street.
Indeed, I love that line. It's set up to lose track of stuff. That's disturbing, and it's like $1 trillion industry. It's amazing.
It's the mainstreaming. It's the mainstreaming of Ponzi schemes, because there has to be more and more demand for something that we know that there's an unlimited supply of.
Right.
And
and it's legal.
And it's legal. Yes. Fault tolerance is a good way of putting it, meaning everyone it prefers ignorance over, ignorance is bliss. But again, the same thing will happen with Bitcoin. I agree with Farzan. I just don't see a world, a decentralized world. Yes, the trend in general is people are angry at governments, at financial institutions, but there'll always be big governments and big financial institutions. The difference is with Bitcoin, they won't have as much control. There will be an increasing use of cryptocurrency, which is outside of the system and competes with it, so they won't be able to dominate everything. And as far as Farzan also says, the debt issues in the legacy economy will have to be addressed. I was just looking, the national debt was $10 trillion the day of the Lehman bankruptcy. Today it's 21.5. plus the $5 trillion that they put on off their balance sheet with Fannie Mae and Freddie Mac. And it's only going to get worse. Now interest rates are going up. We're seeing record inflation readings everywhere. And we're seeing fiat currencies around the world collapsing. The South African rand is a perfect example, but it's not exclusive. It's everywhere. So all these issues. Yes. And all these issues are going to be addressed at the same time that the demand for cryptocurrency around the world increases. And then, of course, the Wall Street people, who all they care about is profit. You saw it when they came in January 1st with their crypto hedge funds, just like I said they would. And look what they did in just a few weeks' time. Well, they're going to do it, permanently. And now that we have BACT coming in and ETFs and futures, they will, this fault tolerance will move over to Bitcoin, and there'll be a dramatic increase in institutional ownership. It's just a matter of time. The price goes up and they buy, and the price will go up whether they're there or not.
Yeah, I'm not sure I agree with that, because one of the big Wall Street folks for whom I have tremendous respect put it this way, that Wall Street needs to solve Bitcoin's scarcity problem. They look at that 21 million cap and say that's a problem. We look at that and say that's a feature, not a bug. They look at it as a bug, right? And so by creating these unbacked claims that people think are real Bitcoins and passing them off as if they are going to bring more supply. That is why the price of Bitcoin dropped on the BACT announcement, I believe. There wasn't a lot of other news in those first couple of trading days, and the price went down 20% on the BACT news, because markets, this is the wisdom of crowds, markets discount future activities when they're announced into the price of anything on that day. And what this is a license for Wall Street to start creating unbacked claims to Bitcoin and, in their words, solve Bitcoin's scarcity problem. I don't think it's a problem, but they do.
Well, that's a speculation that's going to happen. And again, the price of Bitcoin on any given day doesn't respond necessarily. There's very few news items that make Bitcoin move at all. And whether there was a coincidence about that day, I don't know. I'm not disputing. I mean, maybe people do believe that, but there's so many reasons why Bitcoin is different from other assets such as gold that are going to develop in time. So I'm not disagreeing or agreeing. I'm just saying it's something to be watched. But the thought that, oh well, this is just like gold, that they'll just do the same thing. I mean, I strongly disagree with. That's another story.
Yeah, no. Where I was disagreeing with you is that that they are going to be artificially increasing the supply. That is their business model. They are going to be creating unbacked claims to Bitcoin through all these various insidious mechanisms, like rehypothecation, like margin loans at less than 100%, like collateral substitution rights in clearinghouses, where you don't have to post actual Bitcoin, you can post treasuries or cash on your exposures. There are ways, lots of different ways that unbacked claims to Bitcoin are going to start leaking into the system, and they're inherent in the clearing and settlement infrastructure of Wall Street.
But the beauty of it is, this is like your show, like with Mike Krieger and Blake, that, the delivery process for, let's say, gold is essentially impossible. I mean, central banks can't even get their gold, and they don't even really want their gold, even if they could get it. In the case of Bitcoin, the Bitcoin community, if they sense this, big whales can just take their Bitcoin. Yeah. I mean, you can't stop them. They'll say, I want my $10 million worth of Bitcoin now, and that's it. So, again, it's a developing thing. It's just a matter of the three of us have been watching Wall Street do this for so long. And again, on the anniversary of Lehman, this is why Bitcoin was created, on the 10th anniversary of Lehman. Basically, the white paper came out October 31st of 2008 as a response. So in time, I'm confident, I'm not saying tomorrow, that the Wall Street mechanisms for solving the scarcity problem will be defeated. But we will see what happens in the near term, because they are going to try, as Caitlin said.
One of the things. Oh, sorry. Go ahead.
Go ahead, Caitlin. After you. Go ahead.
One just quick addition. One of the things that would keep Wall Street honest, that would make me say, yes, you're doing this right, is if they actually offered clients, as you said, a right to settle in physical. And you talked about it, we could just withdraw our Bitcoins. The problem is with the ETFs and with the futures contracts, there is no right to settle in physical. When you sell, they're going to pay you cash. So that if they actually did give you the right to settle in physical, which I completely agree they should and would be easy to do, then it would keep them honest, and I'd be a lot more comfortable.
Okay, well that's kind of like the GLD and the SLV. In the SLV, you could theoretically get it, except you'd have to get 1,000-pound silver bars that no one wants
That would be very
that are
heavy.
liquid.
Yeah.
And yes, they can hypothecate. So yes, they are going to have all their built-in bells and whistles to favor their system. We'll just have to see if their system can beat the ultimate financial creation by the 99%.
Yeah.
Farzan, you're about
No, just a small thing, just to add on, which is, I think the thing that many people forget is that all monetary value is relative, right? So you cannot express a value of something in monetary terms without relying on referring to something else. And by default, we do it in the currency of our country, so it's dollars, etc. Like I always do a little thing when I talk to people. I take my phone and I ask an audience, how much is this worth? And invariably, if I'm speaking in South Africa, the people in that room have a rand figure in their mind. If I'm speaking in the US, it's a dollar figure. In Japan, it's a yen, etc. So we're so socialized to think in terms of the fiat currency that we're used to, that we forget that things change, that money changes, that money evolves. We forget that the Fed, so let me put it this way. The bank that I used to work for, and many banks, are much, much older than the Federal Reserve of the United States. The Fed is 105 years old. That's not a long time. The dollar as we know it today is about 47 years old. That's a really, really short lifespan, half a human lifespan. So I think a lot of people talk about the experimentation, or that the jury is still out on Bitcoin. I think the jury is still out on the dollar. And I think we're going to see I think in my lifetime, there is a very good possibility that the dollar does not exist.
I agree with
And
that.
so this discussion about what is the Bitcoin worth, and is it going to go up and down? And one last anecdote that I'd like to give is, Zimbabwe, talking about Africa, was one of the most stable countries in Africa. It was the pride of Africa 2-3 decades ago. I remember friends of mine, I used to live in Nairobi, going to Harare, coming back saying, wow, that is such an amazing place. So you would never have said, that in 2-3 decades from then, that we would be dealing with an economy as it is today. And when you think about the price of a Bitcoin in terms of a Zimbabwean dollar, sometimes people are like, no, the Zimbabwean dollar doesn't exist. I'm like, yeah, it doesn't, but there's still an exchange rate. That exchange rate is infinite.
And you're going.
So if ever the dollar does die and Bitcoin outlives the dollar, by definition, the price of a Bitcoin in terms of dollars is going to be infinite.
Right. And the thing is that all of us secular Americans, at least Caitlin and I and Adam, we all think in terms that the whole world uses dollars, when in fact only 8% of the world lives in America. And yes, more of the world uses dollars than 8%, but most of the people don't. And so when people in America read stories about, quote, emerging market currency crisis, they don't realize that this is the vast majority of the world. They don't realize that in India, where 1.5 billion people live, the Indian rupee just hit an all-time low last week. This is a year and a half after Modi created his cashless society. Or that the Chinese yuan, as much as it's being managed, is very close to breaking the 25-year low of 7 to the dollar, which these trade wars will inevitably push it to. And then, of course, all the other countries in the world. I mean, I remember when I went to South Africa 10 years ago, it was 6 to the dollar. Now it's 15 to the dollar. Yeah. And there are far worse places in Africa and far worse places on other parts of the world. So when we say, will the dollar be the same as it is today in our lifetimes? Maybe it will, maybe it won't. It certainly will have less purchasing power, but many of the other currencies of the world won't exist at all in our lifetimes, and that is guaranteed.
Yeah, absolutely. One other thing to add, which is when we think about institutional money, and we think about all these currencies that Andy just talked about, and that the world is shifting. This idea of unconventional monetary policy is a term that's just come about in the last decade.
Yeah.
And we don't realize that what that means is that conventional monetary policy stopped working. Otherwise, we wouldn't be using unconventional monetary policy. So the fact that we're here, that we're, by some accounts, over the last few years, have had interest rates that have not been lower than this over the past 5,000 years, where we have the Fed's balance sheet of 4.5 trillion US dollars, and we do not know what an unwinding of that looks like. I think it's actually getting to the point that it may be even irresponsible for a lot of these institutions not to have a little bit of a hedge in this new asset class that might be a hedge to the let me not say, I was going to say shenanigans, but some of the instability that's inherent in our current financial system.
I would agree with that. The challenge, though, of course, is that the institutions like pension funds and mutual funds will naturally want to buy a Wall Street version of Bitcoin because they want to fit it into their clearing and settlement infrastructure, right? They don't want to have to deal with holding their private keys. The huge pension funds like the CalPERS of the world absolutely could. They have the capability to do it. The big hedge funds are doing exactly that. But most institutional money is going to buy the Wall Street version of the product. And to quote Jim Grant from his wonderful essay that was printed on the 10th anniversary of the financial crisis, talking about ETFs being the tail that wags the dog proverbially, he said, look, no one knows what's going to happen when there's a rush for the door in an ETF. And if indeed we have these unbacked claims that I strongly suspect have crept into ETFs all over the place, just because I know how Wall Street's accounting system works. And you don't know this until you have a reckoning event. You couldn't have told how big that bezel was in the Dole Food situation until there was a merger. I experienced it in my pension business at Morgan Stanley. Until we actually tried to transfer all of the bond portfolio from the pension fund over to the insurance company that was providing annuities to the pensioners, and we were freezing things in place. So the musical chairs stopped. We did not know that there was unauthorized securities lending happening in that account. It was not discoverable until you have that reckoning event. And what Jim Grant is talking about is these reckoning events are going to be ugly. And you're going to see a big collapse in the price, and the tracking errors on those ETFs is going to be massive. I think he's right, but none of us can prove it because with only a few limited exceptions, we really haven't tested the ETF market yet.
Yeah, and I'll certainly bring up my area of expertise, the GLD and the SLV, which came out, trying to remember what years it was now, the late
10 years ago?
Yeah, the late 2000s, 2008, 9, 10, whatever. And
it was
to
crisis,
yes, to this day, they have not been audited. It's no different than the Fort Knox gold holdings. Literally, there's no requirement in the disclosures for them to ever be audited. They can also subcontract custodianship of the gold and silver to other entities, not report who those entities are. Of course, they don't have to be audited, and of course, they're allowed to lend out those quote gold holdings, and they have, and we just don't know how much. So to that end, this is what they do, and I'm sure if there's a Bitcoin ETF, whether it's the Solid X one or another one, it'll have those same very loose wordings that allow the custodians to do whatever they want. I'm curious to see who the custodians are, because in gold and silver, you have two of the biggest criminal banks in the world, HSBC in gold and JP Morgan in silver. But again, there's just too many things going for Bitcoin that were not going for gold and silver, for instance, which was their primary competition before the digital age started. For one, of course, governments don't own any Bitcoin. They can't pretend, they can't be like the US government saying we have 8,135 tons, because we know that they don't have any. We know that pretty much no government has any. And governments don't have the same goals when it comes to fiat currency. They all had the goal of keeping gold down and supporting fiat currency inflation, but they don't all have the goal of keeping Bitcoin down. And I don't think most of them even understand how it works. And then, of course, is the delivery issue and the blockchain transparency. All of these things are going to be fighting a titanic war in the early stages of the Wall Street financialization of Bitcoin.
Yeah, I looked at the VanEck SolidX filing with the SEC for the ETF, and you'll be interested to know I have two beefs with it. The big ones are that they say nothing about custody. There's literally one sentence in there that says the trust is going to custody the Bitcoin.
Thing, right?
Right, exactly. And they say nothing about whether they're going to be lending it out. There's just nothing disclosed about custody. And the other beef I have with all of these Wall Street products is they're not making any commitments on forks or airdrops.
Yep.
So, what are you really buying? I was joking with a regulator I was speaking with recently that I'm an attorney, but I'm non-practicing. I might reactivate my bar membership and start suing fiduciaries for buying some of this stuff because there's no promise that's being made to the investors. Where's the investor protection in this stuff when there's no promise?
Caitlin, question for you though. So what type of kind of commitment would you expect? Because I think that's a very difficult thing to expect from an institution regarding the fork. So what would you have in mind there?
Well, it is interesting. I must say GBTC is the best one of the ones I looked at, including the synthetic ones, the CBOE and CME futures, which are cash settled. I was more interested in the physical settled because they have to actually deal with it as opposed to just try to track it synthetically. But GBTC is the best one. It actually is the most specific. I think if I recall right, they actually they said something about whatever's the longest chain within 48 hours. But one of the big, but all of the other ones, including VanEck, essentially just says, the VanEck SolidX application says that our risk and management committee will consider the appropriate course of action. So basically you have no legally enforceable promise. Sorry, go ahead.
Yeah, well, of course, that's not an issue anymore. It was an issue at the time that GBTC was dealing with the Bcash fork as to what they would recognize. Fortunately, Bitcoin has won the scaling debate. So the issue will not be whether or not Bitcoin will still be Bitcoin after fork. The issue is how they will handle the dividends. And
exactly, that's what I mean.
And again, fortunately, because the Bitcoin forks have kind of fizzled out, there's really that's not an issue anymore because like B Diamond and all Super Bitcoin aren't worth anything.
We don't know.
But airdrops. Right? We don't. And airdrops. I got my B Rhodium clock behind me. It's about to launch later this month. There will be airdrops that are going to be worth a lot, and they're going to have to decide if they're going to get those and give out the dividend. And yes, GBTC did actually give out a Bcash dividend when it was worth something. Good for them. But my bigger question I'll ask to you, because you read all the filings. So with all this talk about custodianship and ETFs and the SEC rumors that they may approve the SolidX, it's backed by the CBOE and everything, how could they possibly approve a Bitcoin ETF that doesn't even suggest anything about custodianship in the filings?
Isn't that a good question? But you point out exactly the same thing is true in these other ETFs for other scarce assets like gold and silver. The SEC's job is investor protection, and sunlight is the best cleanser, and they don't require disclosures on some of these things. And again, the thing that's so amazing about blockchain is we've got the actual public chain. Why not use that technology in forcing disclosures of public keys so you have a verifiable net asset value, or you can verify that this, your financial institution is indeed not playing three-card Monte with your own coins behind the scenes. And again, I want to underscore, I'm not against banks. I'm not against, and I completely agree with your statement earlier that they are always going to exist. It's the playing of the three-card Monte with the client assets. That's the issue.
I agree with that.
All right, let's. We're bringing up the word the VanEck. Caitlin, is it going to get approved? Or do you think they're going to wait till the last minute? I think the last possible minute for it to get approved is like in February of 2019. Are they going to keep putting it off? What do you think?
I don't have any better insight than anybody else.
Okay. No special. Well, here's a question that Andy actually brought up at the very start of the show. With all this three-card Monte stuff that's going on, long term, can these Wall Street organizations manipulate the price of Bitcoin? Long term, not short term, long term.
Right. Well, I gave my opinion in the last answer that there's just not enough reserves out there or governments that have the same goals. And of course, that there's so much more transparency in the blockchain and in the delivery process. So I think a lot of the governments are going to be fighting each other in the ultimate game theory to see who gets the most Bitcoin, not who can suppress it the most. I don't think there's going to be any ability to do that. The real manipulation in this case is solely going to be what Caitlin's talking about, Wall Street, as opposed to in gold and silver, where it's Wall Street aiding and abetting the central banks of the world who are trying to support fiat currency.
All right. Caitlin, your thoughts. Long term, can they manipulate the price?
No. Long term, nobody can manipulate Bitcoin. They definitely can short term. I think they already have. But But no, Bitcoin's going to win. It's too decentralized. They can't control it. And anybody who really tries to play three-card Monty, to Trace's point, the community will just fork them.
Yeah.
And reveal the magnitude of the insolvency of the financial institution. This gets back to my earlier very strong statement. Any taxpayer-backed or Federal Reserve-backed financial institution should not be leveraging cryptocurrencies.
And people also need to remember, I know everyone thinks that the Bitcoin market is so liquid because, you know, you put on like Bitfinex and you'll see a lot moving or trading. But the fact is, first of all, most I would say 95% of Bitfinex is spoofs. Almost everything is fake. And especially, at least it got reasonably liquid during the top in like December and January. But right now, yes, it's much more liquid than it was 2 years ago, but it is an extremely illiquid asset that can be moved around, especially now that you have futures and a handful of big sophisticated whales and Wall Street doing their thing. But as it becomes bigger, there will be far more liquidity, and these games will be far more difficult to perpetrate.
Andy, I'm interested. When you say 95% is spoofs, I'm sure you're talking about wash trading and the like. Do you have any evidence for things like that, or is it just a hunch, or where does that statement
Well,
come from?
I'm not specifically saying wash trading because I mean that there's no way of proving that. But you know, for someone who's watched tick for tick, not just Bitcoin but gold and all kinds of other things, it's pretty obvious. And it's funny. I was just noting that the last 2 or 3 days when the price started moving up, all of a sudden the spoofs disappeared. But I'm talking about for pretty much this entire bear market year, going back to February, March. If you just watch Bitfinex for any given period of time, you'll be like, wow, almost everything here is fake. Every move up is met by big bids that go away. Every move down by big offers. There's far more of the offers. I would say for every fake bid, there's 10 fake offers. I mean, it's really embarrassing to watch. It's worse than watching the GLD or the COMEX. But it is a fact of life. In a thin market, these big players move the price around with fake bids and offers. In fact, if you look at my tweets, like I've tweeted so much about this. I put one in a few days ago. I said, watch on Bitfinex. The 5 biggest fake spoof offers are for 32, 29, 17, 11, and 5. And then after that, I'm watching, and sure enough, those numbers just keep popping up over and over again. So yes, it's a very illiquid market right now, but much more liquid than it was 2 years ago.
I want to ask Caitlin, you talked about the Wall Street. It's not a feature for them that they're only going to be 21 million Bitcoin. They're going to try to create ways to make it look like they're more Bitcoin. How about this as an option though? And how about altcoins with them? Have you heard talk about them wanting to get into altcoins? Are they interested in Ethereum? Because there you go. There you got more cryptocurrency to play with there. You're not limited to just 21 million. Are you a Bitcoin maximalist? What's your take on Wall Street altcoins and your thoughts on altcoins?
Well, yeah, they're definitely interested in Ethereum. So that's coming too, right behind Bitcoin, maybe, I don't know, 6 months behind Bitcoin, in terms of Wall Street creating, Ethereum-based packages. And I think over time, their goal is to trade anything that's liquid and do what they do with anything that's liquid. So that they're not going to get involved in all these fights between the tribes, if you will, but in this industry, because they just want to do what they do. They're all about capturing bid offer spread and inflating the supply of assets so that they can trade even more and capture more bid offer spread. And then they take their money and run. This is not. They're not going to get tribal about this. Whatever's liquid is whatever they're going to want to trade. Yeah. But am I a Bitcoin maximalist? Yes, I am. I think it's going to take 20 years for that to play out. And I do think that there's real room for other blockchains. I think Ethereum has amazing applications for tokenizing things. Will Bitcoin be the better use for that over time? Maybe, but right now Ethereum's got a lead in tokenizing assets, and there is real value to that, because I do believe that the cruft that happens on Wall Street can be fixed by blockchain, and at this point, it's wide open in terms of fixing the cruft on Wall Street with blockchain. Clearly, Bitcoin has a big lead on money itself. And really, Ethereum's not really going after Bitcoin in terms of monetary use.
All right. Farzan, you mentioned Ethereum beforehand. In South Africa, is it a Bitcoin maximalist homeland, or is there a lot of talk about these other? Do people want to diversify there? I mean, as you can see on Twitter, in the Western world, there are some passionate Bitcoin maximalists. Is it the same in South Africa? What's your take on altcoins?
We get the passionate fights and disagreements and debates over here for sure. But there's a lot of talk about alts, and I'm on a WhatsApp group called Altghanistan. So there's a lot of information and kind of different views. And I really agree with Caitlin. I still think it's early days, and I think right now there's been this kind of lull in any forks, etc. But I still think it's important to note that we haven't solved scaling. And a nice stat I'd like to give is that when we think about Bitcoin and we think about Venezuela, and if we said, listen, let everybody in the world just give all the capacity on the Bitcoin blockchain network to Venezuelans, then effectively each Venezuelan would only be able to submit one financial transaction every about 2 months. That's simply not doable, right? So we're getting there, the second layer, Lightning, etc. But I still think we have to have a little bit of humility. Things change quickly. So I personally am a crypto, let's say I'm agnostic, crypto agnostic. I don't know what will win out, but I'm super excited about this ecosystem because I think just the crypto traffic money is huge. And I think those are the conversations that we're having here in South Africa, like everywhere else in the world.
By the way, Farzam, Lorian Gamaroff said hi. He wanted me to say hi to you.
Thanks very much.
Speaking of guys, who are into other coins and stuff. Andy, I'm very familiar with your feelings, your thoughts about altcoins and everything. Do you have anything to add to what was just said?
Right, but Wall Street plus altcoins is the question.
Yeah. And
of course, well, look, first of all, we know. Like what Caitlin said, the answer is the sky blue? Does a bear crap in the woods? Will Wall Street embrace altcoins? Are you kidding me? This is the greatest invention in the history of Wall Street because they're so liquid and so volatile, and they'll have huge bid-ask spreads, and there's so many suckers that get involved in these things, 80%ers. That's how they feast. It's the greatest invention ever, and altcoins will be a Wall Street playground forever. As far as where we're talking about, we have Goldman Sachs. They bought Poloniex through their Circle venture capital that I think they own about 30 or 40% of that. That's the first warning shot. But they will all be in because if everyone remembers just less than a year ago how liquid those altcoins got when people were into them. And I'm not just talking about Ethereum, which went to a $135 billion market cap for absolutely doing pretty much nothing. But a lot of these smaller ones became very liquid too. And so they will do it. They will create ETFs for Ethereum. They'll create basket ETFs that have all different altcoins in them, just like we have baskets of pretty much every sector. And again, of course, I'm a Bitcoin maximalist, but only in terms of its monetary impact on the world. The tribes, there are no tribes anymore. I mean, in fact, I just saw the headline. It said, "Watch Jimmy Song and Roger Ver get into a fight in 30 seconds." Oh. And you look at this and you go, can you believe there was ever actually a war between Bitcoin and these idiots? Because there's no more tribes. Bitcoin is the king of money and will be as far as cryptocurrency as long as it exists. But altcoins are going to be a huge part of the environment for years to come, and Wall Street is going to capitalize in a big, big way.
I think they will.
All right. I want to thank everybody in the super chat, by the way. Jim, my buddy up in Pennsylvania, and Fenton sent some contributions. Thank you, guys. Thank you very much for that. There is a question that is going to kind of refer back to what we were talking about before, but it's a deep question. This is for Caitlin. I would love to hear your thoughts about privacy upgrades on the Bitcoin main chain, potentially making rehypothecation possible. So we're talking about it would be great to have privacy upgrades on Bitcoin, but there's a darker side to it there. It could make it
it obfuscates.
Yeah. So what are your thoughts on that? That's crazy.
It's a great question. I thought where they were going was a point that Andreas made earlier, which is that the problem with Wall Street is because of the Bank Secrecy Act, that Wall Street whales are going to be influencing the technology upgrades and specifically privacy upgrades. And he was making the point that the Wall Street whales would try to block privacy upgrades to the Bitcoin core software. And because their compliance departments won't let them trade in any of the privacy coins.
How would they be able to do? How would they be able to
Well,
do
so
that?
his point is, since they can't, in other words, if the community forks, or, upgrades Bitcoin Core to include privacy, in all of its versions, and Wall Street can't follow that because they can't comply with the Bank Secrecy Act. His point is Wall Street's going to fork into what he calls Corpo Coin, and that may very well be what happens if a privacy upgrade takes place and Wall Street can't follow it for compliance reasons. But your questioner asked a slightly different question, which is, wouldn't Wall Street want to benefit from that because they could play even more games if they do? And the answer is yes, but I think the bigger obstacle is Wall Street's not going to be able to because of the Bank Secrecy Act. They have to know their customers. They have to comply with anti-money laundering laws, and they also now have to know who the beneficial owner of the assets is. Trump has gone, in the very wrong direction on financial regulation. He's making it worse, not better. All the deregulation talk he's had in other industries, he's done some good things, but in finance, he's gone backwards. It's getting worse in the Bank Secrecy Act compliance in financial services. So Wall Street can't deal in privacy coins.
Yeah, I just want to add, I just think it's funny. Talking about the concept of Wall Street whales, it's with quotes around it, will try to block privacy on Bitcoin, which is, for one, the term Wall Street whales, who is that exactly? And of course, what exactly is privacy on Bitcoin? But more importantly, it was just a year ago when the most powerful miner in the world, probably aided by the most powerful government in the world and the most powerful Bitcoin investor in the world, threatened to fork and break Bitcoin in two, and a month later they were destroyed. And they had everyone on board. They got all the SegWit2x, everyone possible, and within a month's time they were humiliated and defeated. And now Bitmain is going to go bankrupt, and Roger Ver has become persona non grata. So to think that anyone could stop anything in Bitcoin, let alone some kind of small protocol change, which is going to happen anyway. It's not like it's going to be a hard fork. It's just going to happen naturally.
Yeah.
They'll think it'll happen off chain, all kinds of stuff. The AML KYC, again, it's laughable. It sounds like a big story now because they're trying to create ETFs, and Goldman's like, whoa, we got to create a policy if we're going to have crypto. But in a few years' time, everything about cryptocurrency will be so anonymous and decentralized that there's nothing they can do. And the same thing goes, like the SEC just admitted that Ethereum is basically decentralized. We can't call it a currency or security, because the fact is, even ones like Ethereum that have an Ethereum foundation become decentralized. We talked about Steem on my thing last week. Steem is already decentralized to the point where Dan Larimer really isn't even a part of it anymore. And it's going to happen with all these new technological innovations to the point that AML KYC is going to become the biggest joke in cryptocurrency.
Well, you know what? I welcome.
And let me add one more thing, Adam. Again, the more money, when they talk about these decentralized exchanges, everyone says, oh, it can't happen because you need more fiat. But as cryptocurrency becomes more valuable, more and more of the worth of the world is going to trade on decentralized exchanges, so that what trades on Wall Street is going to be the minority of all the crypto that's trading in the world. It won't even matter.
Can I just add one thing
to that? Please.
So I think Andy brings up some good points. I think in the short to medium term, though, I think KYC and AML is going to be a big thing, because we're talking about the on-ramps between cryptocurrency.
Yes. In the near term, I agree. Yes.
Right. So that's going to be there. But I think very few people have kind of looked forward to seeing, okay, what is the implication on this for tax collectors, for the revenue services, etc. And I think as more and more people start losing trust in their governments, as more and more people start losing trust in their financial institutions, which they are, and you have a medium of exchange that allows for all the privacy that we've talked about without relying on a trusted financial institution, we're in a whole new world where our current regulations, our current paradigms just do not apply. And at the end of the day, money is a network effect. So even if a government says you cannot use it, but the people want to use it, and because of its scarcity, it still maintains some value, it's very, very difficult to shut down. And I think very few people, especially in the establishment right now, recognize that, or if they do recognize it, want to actually acknowledge it publicly.
I wanted to say, what Caitlin brought up, corporate coin, that, if privacy becomes an issue, that some of these big organizations, they'll just form their own Bitcoin. yeah, they're welcome to fork off. You know what? If they want to give me their free corporate coin, hey, because I know a lot of people will buy into it. They'll get really excited. Oh, Goldman Sachs is going to have their own Bitcoin. So many people will buy. I mean, it's complete nonsense in my head and in most of the people's heads watching this. But heck, yeah, they'll be. I mean, that's a very interesting. I mean, we don't know what the future is going to bring, but there might be corporate Bitcoins. These huge Wall Street corporate coins. This is. Wow, I'm learning stuff. And you know what? And again, I don't support that stuff. If they want to give it to me for free, heck. I'll give it to me for free. I'll trade it for the real thing. Because
and not just Adam, not just banks. I mean, you know, we talk about Amazon, Facebook, Starbucks. Everyone will have a coin because it'll be like the tokens. You know, the ERC20 tokens earlier this year. If people think there's money to be made off it, everyone will make one. And of course, as everyone starts making one and crypto becomes a bigger part of the global economy, everyone will feel that they have to. And again, it will by de facto make things more decentralized and cut out tax collectors and politicians. It's just a trend over time that can't be stopped.
Yeah, I think I'm just fascinated by the fact that the privacy edition is going to force them into a corner, possibly, to do this.
It will, because they cannot adopt a private cryptocurrency. They couldn't be doing this with Monero, for example, or Zcash. Yeah.
And with Monero, you can see the beginnings of that basic truth, because Coinbase, which is not a big financial organization, they won't list Monero. They don't even know.
But that was exactly Andreas's point. Like, the Coinbases of the world actually had a big impact on the debate last August. They didn't influence it. And again, back to my earlier point, I want to clarify. I don't think Wall Street's ever going to be able to control the debate. But are they going to have a big influence because they're whales? And again, we think Coinbase is a whale. Wait till you see core Wall Street market infrastructure coming in. The Coinbase is not going to be a whale compared to that.
Yeah, well, Wall Street will just buy Coinbase for pennies on the dollar. It'll be like them buying Poloniex. They'll laugh at it.
Yeah, what we've seen so far in the crypto space is really small compared to what's going to be happening now that core Wall Street infrastructure is coming into this space. It's gonna have a big impact, but will it control? No. But will it have an influence, just like Coinbase did relatively last year? Of course, because these are going to be big whales.
Wow. Pound that like button, everyone. This show has been freaking on fire. I am pumped, dude. But I told everybody just an hour, so we're already there. So I want to get to the conclusionary remarks, and I mean, there's still some questions out. All of these guests will return, of course. And again, we do this Week in Bitcoin is every Friday. You get to hear the best guest in the space I bring on this show. I work very hard to do that. Farzam, was anything left out? Is there anything you want to add? Is there any topics? And also, you got to mention what you're emceeing the event next year at the 2019 blockchain event in Johannesburg. But take it away. The floor is yours.
Yeah, so just on that note, there is a big event in March called the Blockchain Africa Conference, which I'll be emceeing. We should have hundreds of participants. It's always been a great conference. I think it will be the 4th year that it's running right now. So it's been a great. Is it the 5th year?
Yeah, I was at the first one. Yeah, I've been at 2 of them, 2015 and 18.
Awesome. Yeah. I think the last thing I'll probably say is it's a social comment, which is that the world is starting to recognize more and more its own unity. Humanity is one. And even though we might have some hiccups along the way, like Brexit and politicians that are really gunning for their own geographic space, if you step back and you look at our money, and let's just take it for the American audience and for the Americans on the panel, I think we're really, really grateful that we don't have a Brooklyn coin and a Manhattan coin. That when you go from Manhattan to Brooklyn, you need to stop and pay somebody a few bucks to change it and then actually go to the restaurant in Brooklyn. Thank God we don't have that. We've just got the dollar. We don't even have a New York coin and a California coin, thank God. But the fact of the matter is we do have a US coin, we have a China coin, we have a Japanese coin, a South African coin, et cetera, et cetera. So even though we've seen this flourishing of assets, of crypto assets and tokens, I think because money, and when I'm talking about specifically the utility nature of money and the currency nature of these coins that we're talking about, because it's a social network, I think we will be converging onto 1, 2, 3, I don't know, but a few. I don't think we're going to have a huge explosion. You might have them, but I mean, the point is it becomes infeasible for people to start calculating what is this Starbucks coin in the JP Morgan coin, etc. Humans need a kind of consensus of how they actually look at value. And I think we're moving slowly in that direction. I don't know exactly what it will be, but I am extremely excited and tremendously privileged to be in this community.
Great conclusion there. I agree with that. All right, Caitlin, moving on. Well, welcome to the show again. Your first appearance is already legendary in my head.
Thank you.
Is there anything you wanted to add? And I do have a specific question. You got to talk about Wyoming, and you got to talk about Tyler Lindholm.
Right. Oh, that's what. Yeah. There's something epic happening in Wyoming on Monday, the 24th of September. We're having a legislative task force meeting, and both Jimmy Song and Tyler Lindholm, with their gigantic cowboy hats, are going to be there. So we actually get the two of them in the space at the same time. I can't wait. We're not done with creating favorable legislation in Wyoming, and I have a request for your listeners. If you are a crypto company that has had trouble in the past getting or keeping a regular business bank account because the banks are closing you out, send me a message on caitlin-long.com or on Twitter or on LinkedIn. We need examples for that legislative session. These are going to be mostly American companies, but anyone from outside the U.S. is welcome to send me a letter as well. We just need to be able to put that in the record because we are going to be proposing what is effectively a money warehouse bank for the crypto industry to help make sure that legitimate crypto businesses that can comply with Know Your Customer and anti-money laundering, all that stuff, are not going to end up losing a bank account. So shoot me a message if that's happened to you and you're willing to go on the record, because we're going to try to fix that in Wyoming. We're not done.
All right. So some conclusionary remarks from the show today. Anything that was left out you wanted to add about financialization to calm people? Again, don't fear, people. Don't fear. This is just the beginning. But there are some big players are coming, and they're going to play some tricks. And what do you have to say? Any conclusionary thoughts?
Hey, I would just add Trace's point, which is if Wall Street's going to come in and suppress the price with all these games of fixing the supply problem, quote unquote, that just means that it's cheaper for the rest of us to buy it. And when I mean buy it and keep your private keys, because I completely agree with everything. Long term, this is going to be, Wall Street can't really mess with this. This is what the Bitcoin is going to win. But that doesn't mean in the short term that they can't create buying opportunities for those of us who are not afraid to take our own personal responsibility for our own wealth.
Excellent. I love it. Personal responsibility is the new counterculture, people. Remember that. Andy Hoffman, tie it all up here, man. Yes. What was left off? What do you got to add?
Okay. Well, first of all, you remember you had Brian Kelly on your show back in October talking about the wall of institutional money headed for crypto. Remember, of course, that I wrote an article 2 weeks before that saying that it was coming the second that Bitcoin hit $6,000, which was a $100 billion market cap. That's when the whole rally started. And of course, the Hoffman line, the $100 billion market cap is now held for the entire year. That means the institutions have started to come in. They are never going away. And so when we talk about will Wall Street try to suppress it, and yes, there's been a lot of talk in this call about the things that Wall Street has done to suppress assets. Wall Street also props assets up. They're the ones who created the bubble in January that put Ethereum at $135 billion market cap. And cryptocurrency, which is the beginning of a new digital age, is in a bull market, as opposed to gold, which is at the end of a 5,000-year-old stone age. So Bitcoin, Wall Street's main goal is to make money on bull markets, and this is a decidedly bull market that's just starting. So for all the talk about what they will do to suppress it, there's going to be far more that's done to make it go higher. And there's going to be a lot of money that's going to be coming into crypto. I mean, we're about to hit the 10-year anniversary of the Bitcoin blockchain. We're also going to hit January 1st again, and there's going to be a lot more crypto hedge funds now that so many have done their research this year. And oh yeah, if there happens to be an ETF, Katie bar the door, we will be at $20,000 before you can blink your eye. And I just wanted to clarify two things, Adam, because over the years, you've said the word conclusionary at every one of your calls. And I looked it up because I wasn't sure if that is a word. It is, in fact, a word, Adam. So yes, you can say conclusionary at the remarks at the end of every show. But one other word that you do get really wrong It's not hypothetication. It's hypothecation.
Dude, yeah, I'm from Baltimore, man. We bangle every darn word possible. That's why I have you guys on here to you know, correct me, get to translate. The Baltimore accent is, oh God almighty. All right. So anyway, it has been a blast today. I'm sure everyone's excited about getting their corporate coin in 2021 from Goldman Sachs and everything. But I mean, that was I love that point about privacy is going to push them into a corner. Wow, I'm going to make 10 different shows about that. And on that note, I post a new show here every single day. So remember, people, subscribe to the channel. And every Friday, we have This Week in Bitcoin on. Even when I'm in Santiago, Chile, next Friday, I will get a show together somehow. Beyond Bitcoin show is on Saturday. Pound that like button, everybody. This one really deserves a big pounding because it was a great show. Thank you, everyone. Have a great weekend. I'm Adam Meister, the Bitcoin Meister, the Disrupt Meister. Remember to subscribe to this channel, like this video, share this video. Check out the notes section below for everybody's contact information. Thank you again, guest, everyone. Bye-bye.
Thank
See
you.
ya. See ya.
Bye-bye.
Bye-bye.